Hello everyone. This is the pre-market report video for today, 7th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Last week, Japan's general election trigger and the escalation of the Middle East conflict created the massive FIA sell-off, which in turn caused the Nifty to fall 4.5% in one single week. This was the biggest weekly fall in the last 2 years, and Nifty dropped near 1200 points, almost erasing all the gains it had made in the previous 3 weeks combined. Sector-wise, barring metals, all the sectors were down significantly. Realty, auto, finance, oil and gas all fell over 5%. Metals were positive because of the stimulus announced by China. IT and pharma was the least down because of its positivity in the US market. Here, I like to highlight one thing. On Friday, before the market opening, HDFC Bank released their Q2 business update. If required, please pause and have a look. Compared to a year ago, deposit grown by 15%, credit increased by 7%, even CASA ratio also increased 1%. At present, it is around 35%, whereas a year ago, it was 34%. More importantly, they managed to reduce the loan to deposit ratio to 101% from a year ago, 110%. So, couple of mild negatives. One, credit growth increased slightly less, but it's understandable since bank trying to get the LDR to below 90%, so it's a no surprise. Second, LDR dropped to 101% from 110%, which is good and very much positive, but still it's very high compared to other banks. However, overall, according to me, business update tilted towards positive, but because of the Israel-Iran escalation, market erased all its gain and closed negative. About institution, in the cash market, FI was net sellers for the 5th consecutive day. Last Friday, the net sold for near 9,900 crore rupees. On the other hand, DIA net bought for 8,900 crore rupees. Then on the index future market, stock future and stock option market also, FII net sold substantially. The only place FII net bought heavily was on the index option market for 44,000 crore rupees. Based on my open-ended analysis, it appears the net bought call options heavily as a hedging. So these were the quick takeaway from the Indian market. Now let's discuss about the US market. On Friday, before their market opening, US Bureau of Labor Statistics released the report about non-farm payroll data, unemployment data, and average hourly earnings increase on month-on-month basis. First, non-farm payroll data. For September month, it increased by 2,54,000, which was significantly above the expectation 1,47,000 and also significantly above the August month's data. In addition to that, the unemployment rate comes as 4.1% and the average hourly earnings on month-on-month basis increased by 0.4%, which all very good macroeconomic data and reduced the recession fear. At the same time, increased the optimism for the soft landing. All these made all three major index to trade and close positive. At the end of the day, Dow Jones increased by 0.81%, S&P 500 up by 0.9% and Nasdaq rallied positive 1.22%. Regarding VIX, it dropped from 20.5 to around 19.2. Then coming to Indian ADR, in line with the US market, both IT stocks increased near 1%. In case of banks, though both closed positive, ICICI Bank increased mildly. Overall, ADR indicating the positive opening, provided no further escalation in the Middle East. Please note, today is October 7th, exactly 1 year anniversary for the Israel-Gaza conflict. Moving on, about GIFT Nifty, on Saturday morning, it closed at 25,241. As usual, equating it to our spot market shows that Nifty to open positive or gap up of over 50 points. As a summary, global momentum improved now. Friday's very good US jobs data reduced the recession fear in US. So Friday, US market closed positive. Dow Jones hit the fresh all-time high. However, that positiveness was not entirely reflected in GIFT Nifty, but it did to some extent on the Indian ADR. Anyway, for now, it's indicating the gap up opening of 50 points. Regarding overall banking stocks, based on the business update it released so far, two positives, improved deposit growth rate and okay loan growth rate. But however, there is a slight concern around the mild overall reduction in the CASA deposit in some banks like an IndusInd Bank and Federal Bank, but I'm not sure how market will react for this. Please keep this in mind. As far as I know, still SBI, ICICI Bank and Axis Bank haven't released their Q2 business update, and I'm not sure about its timing. So if they release during market time on any trading day, that might influence the market. So please keep tab on it regular basis this week. And also it's difficult to judge the Middle East escalation situation, especially for Reliance, as its heavy dependency of oil export to Israel and Europe. Since any Middle East escalation will increase the shipping cost and insurance, in worst case it might disrupt the shipping completely. Then as per stock open interest, Tata Chemicals, Apollo Tyre, Godrej Properties, ICICI Bank, HDFC Bank and Reliance got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Axis Bank, Wipro, SAIL, Exide Industries, IDFC First Bank and Lupin got an increase in open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out, today Chinese market will be on holiday, and with a new member in the RBI committee, their first monetary policy committee meeting is scheduled to start today and will complete on Wednesday. So coming Wednesday, we will know about the RBI's monetary policy outcome. As far as now, market expects RBI to keep the interest rate unchanged for the 10th consecutive time, but by chance if RBI cut the interest rate means market will react to it violently. Anyway, that's for Wednesday. For today at 2:30 p.m. Europe retail sales data and Europe group meeting are some of the important items we need to keep an eye out today. Coming to technical, last Friday Nifty opened 70 points gap down and increased near to 25,500. However, it failed to sustain and dropped all the way down to psychological 25,000 mark. Thus on the daily chart, Nifty formed a bearish candlestick pattern with a long upper shadow and with 4 consecutive lower high and lower low formation. Here this long back-to-back upper shadow indicating the consistent selling pressure at higher level, and for the first time in the last 4 months, Nifty closed below 50-day exponential moving average. And in addition, it formed the negative bias in the RSI momentum indicator, all indicating the weakness. Then coming to weekly chart, it formed a long bearish candle with minor upper and lower shadow. However, it didn't fall below the recent rally which it started 3 weeks before 24,750 on September 9th. Hence, if Nifty decisively breaks 25,000 on a closing basis, 24,750 is the key support level to watch for the weekly breakout, whereas on the higher side, the resistance is at 25,200 to 25,400 level. In case of Bank Nifty, it opened 200 points gap down and broke below 51,500 mark and extended its downtrend by forming lower high and lower low formation for the 5th straight day. Thus on the daily chart, Bank Nifty formed a bearish candlestick pattern with a long upper shadow. Here the one positive thing is the candle resembles an inverted hammer, and generally the inverted hammer is a bullish reversal pattern. However, confirmation is required today. Then on the weekly chart, similar to Nifty, it also formed a long bearish candle but didn't fall below the upward momentum starting. Hence 50,500 will be a key support level. If Bank Nifty managed to defend 51,090 to 51,000 level, probably we can have a relief rally towards 52,000 to 52,500. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 26,500 and 25,500 with similar strike price new call option writing. On the put side, the maximum open interest was at 24,000 strike, followed by 25,000 and 24,500 with maximum new put option writing at 24,000 strike, followed by 24,800 and 24,200. Thus, from options data, it's indicated that 24,500 is the next key support zone if Nifty fails to hold 25,000 next week, while the upper resistance is around 25,500 zone. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.